Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, February 25, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we have a couple of things going, more than a couple of things. She came into, spiked through, and closed above the 100 period moving average on the daily chart. And let me remind you what was said in 2024, in the fourth quarter of 2024, one more time. We're looking for a February/March low. As you can see, the market's coming down. That certainly didn't look like it was going to happen when the market was going up, but nevertheless, we were pretty confident that a February or March low was on the board. How do we know that? Because in the class, MSF Masterclass Series, there's a module where I teach cycles, and I teach how to do forecasts into the future. And it goes hand in hand with history doesn't necessarily repeat itself, but it certainly does rhyme. And what I do is I teach traders how to extrapolate information from the past to see what's going to happen in the future on the highest probability case. And then we'll give it a how do you like dem apples. Now, where did they find support today? Let's go here for a second and reiterate what we discussed last night. Here's a low here, and then there's another low just underneath it, right about here. Okay, this was, I think, 589.20, and the other one was 590.50, I believe. And what you can see is the market came into that zone and bounced back in the other direction. Why is that? Well, we'll go with the first time, best time, and that zone represented the entrance into no man's land. Looking at it a different way, this low and this low, entrance to no man's land. You could see this box represents no man's land. What's on the other side of that box, the lower end, that's a gap left open on the Tuesday, the 14th of January. Now, you might want to write this down, get out a sticky note, get out a pen. You don't need a pencil. Pen will be just fine. If, capital I, capital F, if the market were to come back and flush down in the morning to 581.40, I'm a buyer with both hands type of situation. That doesn't guarantee you the trade will work. What it is, a price, a setup that I will buy 100 out of 100 times with a full and complete understanding that not 100 trades will work, but at least 80, 85, or maybe even more of a trade like this will work out. It's a higher low situation. Low, higher low, higher low, higher low. Here's another opportunity for a higher low situation, and it also falls into the camp of first time, best time. Write this down, put it on a sticky note. By the end of the day today, the spiders were down $2.88, about 0.5%. It's not a federal case. It's just another leak lower. Do we have what's called waning velocity? The answer is yes, we do. Can it last another day or so? Yes, it can. The market should catch a low within the next day or so. And if they do it at 581.40 tomorrow, I'm buying it with three hands. Do you even have three hands? Any material change on the weekly chart? Not really. She's hovering around and today slightly below the 20-week moving average. But in reality, it's several more days until the week is up. We don't know what's going to happen by Friday's close. We're watching the weekly chart. We're watching on close where she closes, whether it is relative to below or above that 20-week moving average. Notice back on the daily chart, you go from just a few days ago, above all the moving averages, the trend is your friend, until you're below some moving averages. All of a sudden, the trend is changing, meaning ing in italics, ing. Big picture trend on a weekly chart, still up. Daily chart, which is a faster time frame, change-ing. When you squeeze this together and look at it from a long-term perspective, you can see the trend is still up. Even though they've come in to run a test of and spike through the 100 period moving average today, The trend is still up from a long-term perspective. Short-term, giving up these moving averages all of a sudden can open the door to run a test of the 200 period or 200-day moving average. We're not there yet. Again, 281.40 is on my radar before we would get anywhere near the 200 period moving average. What about inside the numbers today? We're going to fall on the sword a little bit. I, meaning David, got it wrong this morning. It does happen. I can't get every trade right. The reality is we were trying to buy 596.35. The market spiked it through, went down to some lower stuff. There was a recovery trade or two in there. Traders had a decent day in the end of the day, but we certainly took some losses early on. Not the entire group, not the whole room, just those that were buying 596.35, and yours truly was included in that. I like full disclosure. I like being an open book. I don't like the concept of, hey, does this guy win every single trade? No, I don't win every single trade. I win the large majority of the trades, and therefore, so do the people in the live room and inside the numbers. What I urge you to do is pause the video, read the notes, go back to the chart to double check the work. All the numbers are in here. You'll see where the market bounced. Here's your 590.50 we talked about. There's a 589.20 on the board. You'll see that later. There's your 589.20. So we definitely had some traders that were picking off the lows down there, not only based on the discussion in the live room, but also based on the discussion in here in the video last night when I pointed those prices out and the reason why those prices are important. Again, pause the video, read the notes, go back to the chart, and double check the work. What's going on over in Camp IWM? Below all the moving averages, and yes, the trend is your friend. The trend is down. Look at this weekly chart. What do we have here? We have a last line of defense from a weekly chart perspective. We have a breakup candle low on the weekly chart, the last breakup candle low in the sequence, and that low comes in at 213.97. That's going to be very, very important for the IWM to maintain price above by Friday's close. You put that line there and you see what happened today. Today she ran a test of it. First time, best time, spiked it a little bit, ripped it back up in the other direction. That's good for a trading situation. Where's that corresponding price in the IWM? For example, tomorrow, if, capital I, capital F, if we were going to get a flush, what's that price I would be willing to buy with the same three hands in the IWM that I was willing to buy in the spiders? Right there, 208.95. It's a spike of 209. I don't have any idea whether they will or will not do that tomorrow. But if they did, I am a buyer with three hands. Back to the weekly chart. Remember, we were talking about this for a while. You had a bearish situation going on here. You could draw this channel and you could draw a flagpole, if you will, down. And this channel is a bearish, wedgish type of situation. And you can see here she is breaking, ING in italics. Doesn't mean she won't rally back up to the top of the channel, but she is now breaking down below the lower portion of the channel, teetering on the 50 period moving average, by the way. What about the folks down at the transportation department? Below all the moving averages, you know the jingle. Clear up the noise, go to the weekly chart, and we have the same channel we just talked about in the IWM. The transports are my second favorite market leading indicator. IWM is a number one. So they couldn't recapture the breakdown candle high, came down to the lower portion of the channel. Here's your flagpole down. This makes it the bearish, flaggish type of situation. She's riding the 50 period moving average, teetering on a breakdown situation. Remember, the IWM and the transport charts always look different than the SPY the whole entire time. This is a canary in the coal mine, favorite market leading indicator. This is why we watch these indices. What about the Q people? 3 stout down days in a row. All of a sudden, she's teetering on the 100 period moving average. Before you look in the rear view mirror, all of a sudden, the trend is your friend. She's giving up the uptrend on the faster time frame, the daily chart. When you go over to the weekly chart, what do you see? Well, here we go again with the 20-week moving average will be very, very critical this week, where she closes relative to the 20-week moving average. Above, that's okay. Running a test, bouncing off of it is normal garden variety market behavior. Getting below, staying below, closing the week below portrays a whole different scenario. Scenario is a technical term. Anything doing with the financials? They were down 1 penny today, so obviously no material change from yesterday. Took a spike lower, but recovered somewhat to finish flat on the day. So there's no material change, and therefore we'll just move it along. Below the 20-period moving average, it's bearish, ISH-ish, above the 50-period moving average, and she's okay. When you go over to the weekly chart, what do you see? The weekly chart is fine. She's above all the moving averages, not even at the 20-period moving average. Nothing wrong with this chart. We have a little bit of a false breakout situation, but she could be eating time off the clock and make another attempt higher. This could be canary-ish. Watch the XLF or the financial complex very closely in the days and weeks ahead. I am. And conversely, Smashmouth, the Philadelphia Semiconductor Index, is getting its head handed to them, taken out behind the woodshed, shot 3 times over the last 3 days. Go from comfortably above all the moving averages heading toward the gap to below all the moving averages, giving up the ghost, as they say. Again, weekly chart, teetering on the 50-week moving average. Below it today, anything goes. We're watching by Friday's close. Very important, that 50-week moving average right now. Looks like we have some earnings release from NVIDIA tonight, or NVIDIA as I should say. Hasn't been released yet at the point in time I'm making this video, but that certainly will impact Smashmouth going into Wednesday's trading activity. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.